Hello, everyone. Welcome to a Friday edition of Daily Trader, where we look at theoretical paper money option trades and give you a walkthrough as to how we get from the genesis of a trade all the way to hitting send on that trade. So we got a Friday edition. We've got really interesting names to talk about, but let's do our macro minute before we get to our two trades. You know, the market is mixed today. You've got the S&P and NASDAQ higher, but you've got the Dow Jones Industrial Average and Russell both lower. Remember, the Russell, a lot of regional banks coming out with their earnings. Dow Jones Industrial Average, very short sample. If you get one name, it could skew the Dow Jones. Good solid day out of the S&P and NASDAQ to finish the week. Interesting. The 10-year yield was up pre-market. When we got the housing starts and permits number, both came in a little weaker than expected. Bonds rallied, yields came down. So that's why you're seeing yields slightly lower today. The VIX, they're taking some premium out of the VIX today, both because of premium and for the weekend effect that we'll talk about at a later date. And then crude oil down now below 170 or below $70. The macro is starting to really kick in on crude oil as geopolitics starts to kind of dissipate from the crude oil conversation. Next week, durable goods. We got Boeing that we'll talk about in a moment. That's one of our trades today coming out with earnings next week. We've got GM will be interesting with all the news coming out of Volkswagen and Stellantis. We'll see how GM handles their earnings. Then we got Tesla on Wednesday. That'll be a good one. Las Vegas Sands is coming out with earnings. UPS is one to look at. We'll trade that next week for sure. And then Southwest Airlines. So interesting as we get into the next tier of earnings. But let's get to our trades here as we're moving along. So first one we're going to talk about today, Boeing. In the news quite often, all the time. I'm a big proponent, you'll find if you listen to me and watch these shows, of the news flow. The news flow affects the stock, and the news flow on Boeing is just horrible. Think about this, a machinist strike. The debt load now reaching $45 billion. They're going into the capital markets and the debt markets to raise cash to get them through this machinist strike. Delays in the 777, 767. And like I said, the news cycle is just horrible in Boeing. But they do have a couple good things, like new CEO comes from an engineering background and is going to have his home base in Seattle, so he'll be on site when they're building these planes. They have, remember something, what's going on in the world. They are an enormous defense contractor, and they've got a backlog. As of, I can only confirm this data that I found. As of September 23rd, 6,165 aircrafts that Boeing has backlog. That's the key to their future. It's just like the cruise line industry, right? When they were going through where they couldn't sail and they were doing nothing but debt, you know what they had? Demand. Demand saved the cruise lines. Demand will save this duopoly of Boeing and Airbus. So that's the genesis for the longer term trade we're going to put on here. So when we look at a name like Boeing, what we want to do is give ourselves duration, give ourselves time for these problems to dissipate and the news cycle to turn well. So we did something we did yesterday in one of the trades. It's the diagonal spread. I like the diagonal spread because it's like a covered call, right? Except you're putting in an option trade, a long call option instead of the stock, and then it's in the calendar spread family, and then you're selling a shorter term option against it. This time we're buying the November 15th. Remember, they have earnings next week. So what we're going to sell is going to be an extremely high level of implied volatility in the October 25th expiration date. So we're going to buy the November 15th 155 call, then look out the expected move for next week, which is about $9.50 on the Thinkorswim platform. And so we're going to go there and we're going to sell the 165 call. So the 165 call. We have it in there for 635 debit. Let's see where it's trading now. About 632. So it's right there. So a 635 debit. Now, what does that do? You are buying in the November 15th, you're buying about a 47 vol. What are you selling? Next week, about a 54 vol. So you're getting that slight amount of edge by buying lower implied volatility, selling the event week. Now, this is a bullish play in Boeing. So if you're not bullish on Boeing, if you're watching the news flow and thinking it's not time yet, don't do this trade, right? Because the delta on this trade is about 32 deltas. Pretty indicative or pretty normal for a diagonal spread like this. So that's what we're looking at there. Buying the November 15th 155 call, selling next week, the event week, October 25th 165 call. It's trading about 630, 635. That'll collect theta. It'll give you that delta. And if you see the profit graph, if Boeing were to gap on the upside, unlike a calendar spread, it won't come back down. You see that profit line up there to the right is flat in the profitable area. Obviously, it maxes out right at the 165 strike, where it's the max level for the 155 call, while the 165 is zero. That's why you see it peaking out there around that strike. Okay, so that's our bullish play, long-term bullish play in Boeing with a call diagonal. Let's get to our next one. And this is another interesting one, Crowdstrike. Now, Crowdstrike, as you know, on July 19th, they had the massive software update where they were doing a update on the Falcon platform, and it caused a disruption in Microsoft Windows that was widespread. And the stock, as you know, sold off hard on that news. How about these statistics? On July 9th, it was trading $398. Remember, it happened on July 19th. By August 5th, it was trading $200. It had lost half of its value. Now, what did we learn from this? What we learned is, number one, it was a software update, right? That could happen to any firm out there in a software update. It was not a cybersecurity breach that CrowdStrike didn't defend or perform well against. It was a software update. Now, here's the next thing. This is a name that, when that happened, they had unlimited amounts of help they were giving people. The stock sold off, but think about this. There was a lot of uncertainty. That's why the stock sold off so hard. You saw the Delta Airlines come out, high profile news. So as that dissipated, and I want to bring you something to October 10th, the day that Delta earnings came out, right? Delta earnings came out. What did they do that day? They put a number on how much they thought it cost them. And what happened on that day? CrowdStrike rallied. CrowdStrike rallied from $297 to $314 that day. Why? Uncertainty became certainty. And once they put a number on it, CrowdStrike rallied. Now, it's come down slightly since then, currently trading about 309. So, but the other thing we learned from this outage, the massive footprint that CrowdStrike has. They are clearly the leader in cybersecurity, and if cybersecurity is not going away, and their Falcon platform is clearly one of the strongest defenses against cyber attacks. So, based on that, what I want to do, though, is continue to give. They don't have earnings till November 26th, the same day as NVIDIA's earnings, so that's a big day to mark on your calendars. What we're going to do here is give ourselves time. Ahead of the earnings event, we're going to go to the November 15th expiration, and we're going to do the 310, 330 call vertical, different than the diagonal spread. Why? Same expiration. The vertical is the same expiration. Diagonal is more in the calendar spread family and different expirations. We're going to buy the 330 call sell the buy the 310, sell the 330 call. It was trading about 770 when we put it in. Now it's trading about 775. So it's right there in that area. Now, it's a $20 call vertical, trading about $7 and change. So you have a chance for almost a triple on this name if Crowdstrike were to go to 330 by 715. Now, there's something different here, right? You're paying theta on this one because it's 2 out of the money calls. You're not collecting theta like you do in the calendar spread and the diagonal. But this one has a chance to go from 7.5, 775 to $20 if you were right. It's a $20 call vertical. The risk on the calendar spread or the diagonal, the risk on the vertical spread, what you pay for it. That's the risk you have. So whatever level you put this on at, if you change the strikes around, play more or pay less, that's the risk on this trade. And you have out till November 15th, which is 28 days for this to move from right around 310, where it's right now, trading about 309.74, up towards 330. So that's our 2 trades for today. A diagonal spread, both bullish. If you're not bullish on these names, these are not the trades for you, but we did a bullish diagonal spread in Boeing and a bullish vertical spread in Crowdstrike. All right, those are our 2 trades for today. And this is the Daily Trader with Kevin Hincks. Have a great day and a great weekend, everybody.